Alright, good morning traders. It's Monday morning, October 31st. Happy Halloween 2016. This morning we're going to touch on our weekly zones, see what we have in store for us for the week. Just brush over any new trades that I may be looking at, and we'll talk about the upcoming Fed meeting. So let's get right to the levels. Alright, first off is the S&P 500. You guys know that we had a little bit of a downtick Friday in the markets. Then it rallied back up. You know, of course, the typical Hail Mary rally that always accompanies this market right here. Again, guys, I've got to tell you, they will not let this thing go down. And I got to be honest with you, that down move, the swift and violent down move we had Friday, that was based off of the FBI release for Hillary. And if this market has been levitating because they believe that Hillary's going to win, which she probably is, but if that's what's propping this stock market up, I want you to really think about how much trouble we're in. I mean, this is the most flimsy house of cards I think I've ever seen a market built upon. If in fact we're levitating and we've been like this because they believe Hillary's going to win. I mean, this is just utterly ridiculous. So anyway, we're back in the green again this morning. We touched down 21.15 last night and traded up over 21.30. So again, guys, they are not going to let this market fall whatsoever. I keep reiterating, it is the single most propped up market I have ever seen in my life. And we desperately need a down move to clear things out a little bit. So who knows, maybe we'll get it. I would like to see some volatility. Maybe that's what the election's going to bring us. I'd be happy with some volatility, but you know, my gosh, let this market stay down for longer than 30 minutes instead of you know, down a half hour and up 3 or 4 days. We had a nice little pullback last week. When you look at the crude chart and you look at it this morning, you know, I commented Friday that, man, these S&Ps and crude markets are starting to look a lot alike again. So let's pay close attention to that and see if the correlation between those two markets kick back in again. So we'll just check that and see. Just remember, we still got all those hedgers in the crude market that are net short, so they haven't been paid yet. And I don't know that we've actually seen the full down move in the crude market. So that's something else to keep in the back of our minds. Alright, so levels for the S&P, 2212 and 2044. I'll come back to this and talk about my trade in just a minute. Alright, for the bond market, you can see we're still operating in this downward channel. It's been intact since it made its highs. And right now we've got yeah, I should have took those layers of support off. We cut through those. We got one layer of support down here at 160. Yeah, maybe 161 we'll call it. But our levels for the week are 158.13 to the downside, 166.02 to the upside. We know based on the bond market trading, this thing could hit the first or second level 50% of the time. So that is a potential. Let's see when, yeah, bond market doesn't expire. Yeah, we've still got probably 20 days or so left in the bond market. I was going to say, if we've got a week left, we rally up to one of those first levels. For example, if this is a play that I'm continuing to look for now that I'm getting data on these markets, is in the bonds, the crude, gold, and the dollar. When they get up to these first levels, where there's a week left on the expiration cycle, I'm going to be looking at selling. So if we rally up, we've got a week to go or less in this market. We hit one of those levels, for example, to the upside, first level gets touched, then my play is to sell that second level up there and bet that it's not going to hit that before expiration, because we have a lot of stats saying that that's the bond market rattles that first level 50% of the time. It hasn't closed outside of that second level yet. So Anyway, that's another way I'm looking at using these levels right here, just for some opportunity trading. Alright, crude. So we've got upside 52.86, downside 44.64. And of course, these blue lines here, you can't see the upward, but that's my current position in the market. Looks like I'll have another week where I make no adjustments at all. My adjustment points are at these second levels in the market for my current position. So if we get in between these two on the downside, I'll start looking at possibly taking some action there. But other than that, I think it's going to be another week where we trade between the red lines. Dollar, upside 137, downside 96.58. Gold, we're looking like upside 1320, downside 1230. You know, I gotta tell you, this is to me, this just looks like a bearish formation to me. Just drifting up in this downward sloping market. It looks to me like it wants to clear it back out again and jump back down to the downside. So we've got some support here about the 1259 level, support here at 1231, and of course, you know, we hit one of these levels here, then we'll really take a look at the gold market. Alright, so let's go back, and here's one of the new trades I'm having on. You know, you guys know I'm still carrying that strangle over from October 12th. You know, it's just another market just refuses to go down. So I'll continue doing what I'm doing in that market there. But just in case we get a downdraft, you know, this morning I was going to sell the strangle again at the second levels. But even at the IV where it is right now, there's no juice in this market. I mean, it is just priced for perfection, I think. So what I did is I put an order in to sell the 2060 level just below the red for about $6. So the market's going to have to careen down, take a dip down before I get put in. But I'm willing to take the trade there. That's a juicy premium. And I don't expect this market to stay down for longer than, you know, half hour, 45 minutes. The other day I got triggered in on the lows of the day, and it stayed there for about 5 minutes and just rocketed back up. So, you know, it's the same old game in this market, guys. Just look at the tails on the bottom of the wicks. This thing is not resting on the bottom at all. It just won't. They will not let this thing sit down on the low side whatsoever. It gets bid right back up every time. So another pattern I'm recognizing is the stock markets after the close for the day and they open back up, it looks like they rocket ship back up. That's been the pattern last probably 3 out of 5 days. They rally up and then they kind of falter and sell back off at the end of the day. So that's a pattern that's holding up. They are really having a hard time rallying it up, but at the same time they will not let it stay down. So there's a big tug of war taking place right now. My volume model has been horrendous since right here. It has just been ugly, just confirming. I mean, my volume model is just, the stock market is this gently downward sloping. My volume model is like this. It is just horrendous, and that typically precedes a down move. But I'll tell you guys, they have figured this market out. They have figured out how to levitate this thing. They've had a lot of practice over the last 3 years, how to keep this thing propped up with the internals looking so bad and so bleak. So anyway, that's my take on the S&Ps this morning and the markets in general, our zones. That's the new trade. I am looking to add to my SPX trade if we get a down move, so I'll put another tranche in and offer to sell another another iron condor, probably at the same levels I put the other one on at. But I'll be looking I don't want in at current prices. I want in if the market tips its hand and goes down a little bit. So anyway, I'll keep you apprised if that takes place. All right, so let's take a look at see if I can pull this up. Yeah, there we go. All right, guys, this is the FedWatch tool. You know, we've talked about this before. This is the Fed Fund Futures, and this is what everybody uses to gauge the probabilities for Feds raising interest rates during their next meeting. Our next meeting is 2 November. There's an 8% chance that they raise rates during this November meeting. So virtually no chance at all. Yeah, that's no surprise. Okay, the next meeting after this is 14 December. Hey, there's a 68% chance right now that they think that they're going to raise in December. In February, 65% chance. March, 61%. So they're really looking at this December meeting as a possibility to raise rates. That's interesting. We'll just keep a watch on this and see how it fluctuates. But that's how they're pricing it in right now. So we know what this is going to bring. You know, no raise. Our stock market's going to rally out the yin yang. But of course, it doesn't take anything to rally this market. So anyway, that's how we're looking on the Fed funds rate and the probabilities. And so we've got the zones out of the way. Yeah, I think that's a wrap for this morning, guys. So anyway, I'll give you an update tonight. We'll look at a few things that's triggered today, and yeah, just probing around here to see if there was anything else. Nope, that's it. Just have a good trading day, and we'll talk to you later. This is BA signing.